Good morning, traders. Good afternoon, everywhere. It's 8:05 a.m. Chicago time, 9:05 Eastern on the 14th of December, 2017. It is Thursday, the day before Quad Witching Friday. Got to get my days straight before I talk. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market this morning showing that we are really in a mixed bag. The overnight on the indices has been sideways for the most part, and not much really to talk about. So let's just go have a drink. Just kidding. The leader this morning's gold, picking up $7.5, up 0.61%. Of course, that follows the FOMC rate hike. In case you were under a rock yesterday and missed it, the U.S. Central Bank raised interest rates by 25 basis points, which is what the market expected, to between 1.25 on the lower bound and 1.5 on the upper bound. And it said it expected 3 rate hikes in 2018. This was Yellen's last conference for the FOMC as she's being replaced. And the expectation is that actually by the end of the year we'll be at between 2 and 2.25% end of the year next year, in other words, 2018. That's the expectation. Of course, unless we all start paying for things in Bitcoin, in which case they'd have to raise it a lot faster to make the currency valuable. And also today is, on a side note, is the FCC vote on net neutrality. If you don't know about this issue, I hope you do. And if you're in the U.S., strongly suggest you speak to your representative in Congress to share your opinion on net neutrality. The FCC votes on that today, affecting how we use the internet here in the U.S. That happens today. Hopefully, the change that's anticipated doesn't actually happen, and that the internet continues to be a level playing field. There's a lot on deck with Bitcoin and stuff. I'm not going to cover that. I feel like I'm giving it too much attention, and it's too soon. And but there's a currency that's taking over, becoming the 4th largest. It's called Ripple. It's a currency that is dedicated to bank and global transfers. It's valued at $18.64 billion and took 4th place away from Litecoin. Anyway, you can follow that saga, I guess, online. It's not really important for us here to trade futures. From what I'm seeing, the futures aren't trading very much. It's I can't say that it's a very successful launch so far. I haven't done anything with it, but that's the overall picture. As far as what we're looking for today, we did have a bunch of numbers come out at 7:30, 7:30 Central, 8:30 Eastern. Import prices, U.S. retail sales, initial claims. But we're expecting at 9:45 Eastern, looking for U.S. manufacturing PMI, not PMI. That's the prelim for December, expecting 53.9. Excuse me. And at the same time, we're looking for U.S. services, also prelim for December, looking for 54.7. 54.7. Business inventories at 10 o'clock today, 10 Eastern. Business inventories for October, expecting negative 0.1%, prior 0.0%. And then EIA natural gas. We did get comments from Draghi. And I've posted some of those on Twitter. And he continues to speak. Those who are trading currency pairs involving the euro or Eurex products, you might want to pay attention. That's it for today. Let's switch gears here real quick and look at, not interested in that, and look at what was expected yesterday. Here's what I was looking for yesterday. I was looking for the market to trade sideways. We were opening just beneath, at least during the trader bite, we're opening just beneath the prior day's point of control. We had some pretty good, in my opinion, some pretty good support underneath at 68. And I was looking for an updrift, as you can see here, looking for an updrift into the FOMC. And the most likely scenario, I said, is higher. Actually, the most likely scenario was dip, then higher. Otherwise, if they don't budge on interest rates, it's an impulse up and then sideways. And then otherwise, the third scenario was a drop, and then the market starts drifting back up again. That's the primary scenario. Here's what happened. This is the release point for the FOMC. Right in here, right there. Okay, that's the release point. And so the FOMC SOC is 26.69 quarter, 26.69 half. The market immediately punched up and then went upwards and then dipped into the close. So none of my scenarios played out for post FOMC. It didn't drift up like I expected for Hypo 1, scenario 1 or 2. It ended up dipping and it never really pushed back up. I'll be honest with you here. I did not trade this. I just did not. I did not, for whatever reason, I just did not see an edge. Overall, it drifted up early through the prior day's high, put in an opening swing. It looked like it was going to be an OTD, an open test drive, potentially an open rejection reverse. It looked like it had some driving behavior on the open, as you can see here. So let's run through that at high speed. Here's the prior day. These are the latest bars, right? So those are the first 3 bars on the open. Pretty quiet open. And it looks like it's starting to drive. Let's adjust the screen here and make this 67% so we can see the delta. Okay, so it looks like it's driving, and we're still waiting for an opening swing high. And there's the opening swing high at 73.75. Pull back to mid down at 71 or so, 71 half, 75. Gets to 71 half. So we have a drive out of range, pull back. That's a legit setup right there for me. And then it continues higher and it fails through the mid. And right here, hands off, right? And just nothing. And then now I have something. We have a slight impulse down, not a clean impulse, but a slight impulse down, pull back to mid 72.50. Couldn't quite get there. Not 72.50, 72.75 at the time. Couldn't quite get there. Stopped by a tick. And then we're looking for a continuation and a break of the IB low. So what we have is range extension up. So the IB high was taken out. And then we have a test of the IB low. What do we have here? Does anybody recognize this? What do we have this? We have a stat for this. I'll give you the 7 seconds. We're going to use a Socrates method of speaking here. What do we have here? Come on. Anybody? What we have is a double IB low stat, 83%. Past performance not indicative of future results. 83% probability of break, right? Down. And historically, 83% probability of a breakdown combined with a 27% probability, 27% probability of what? Of the IB high and the low being broken. Okay? So that's what we have, and that played out. So on this pullback to the mid, we're looking for a pullback to about the mid. Look for resistance on the tape in the market depth. So you go in here. Hang on. Let's pull this window down. you go in here and you look for resistance. You're looking for the market to provide heavy offers like it does here, a lot of white. And then you lean against that, looking for the break of the 70, which takes out the double IB low. And then we get range extension to the other side. And now we have neutral, 27% probability on all days. And then it starts to extend itself down. Here's the non-farm, God, I keep saying non-farm FOMC. There's the FOMC, very quiet, not much going on. I mean, we're several minutes into the FOMC and it's just not doing anything. Very boring trade. And then finally, the market lets go again, gets below the mid. And basically from this point right here onwards, there was nothing for me to do, including the FOMC. So that's how it shook out yesterday. The profile has a very sharp ledge, very sharp drop. That is a fairly weak high. We're expecting a test higher than that. We don't expect that to be maintained as the all-time high for a long period of time. That's just, again, a statistical expectation. And then that carries us into the overnight session. Shoot, I wanted to go over the Russell this morning. Doesn't look like I'm going to get to it. That carries us into the overnight session. The overnight session tests down, pushes back up to about mid of the prior session, fizzles out through the Asian trade. And then we get to the European Open, also pretty quiet, not much to do. Look at this profile, very Gaussian, pretty good kurtosis in the center. Pretty good, basically the mid, look at this, the mid, the VWAP, and the point of control are all in one place beneath the prior day's point of control. The market's completely in balance, and so there's not much to glean from there. The volume is actually relatively low for the S&P, 174,000 on the Globex session. On the day before rollover, the volume should continue to be, or normally would continue to be, fairly strong, and it is not. And so to us, that is more like a 65 to 70,000 contract overnight session, which is very light. So we're looking at probably 40. The trade is about 40% off, 35 to 40% off. Not very much participation, which is ominous for our current session. It's likely to, you can see here in Bookmap, you can see that not much going on. There aren't any big dots. There isn't any clear skew to the market. It's just drifting. If I scroll back here, you'll see that it's just been drifting and drifting and drifting. So that's what we're bringing into the session today. So what does that mean to us as traders? It basically means that we need to stand back a little bit on today's trade. So what we have is a couple of days of balance here. We can throw a profile around these 2 days because they're trading on top of each other. You can see how bulky this profile is. And when I extend it back, to where it came from, you'll see that it's skewed. It's a P-shaped profile. It's skewed to the upside with a weak high, as discussed. And we are dead center on the point of control, the MC point of control at 2671. We're currently trading 2670.50. This further says expect very little this morning. So just relax this morning. That's the biggest thing you probably should take from this discussion. Relax, chill, let the market develop. It'll probably take it about a half hour to 45 minutes to develop anything this morning. So this is a good day for you to just be attentive and focus on just being with the market in silence. You know, just meditate on the market, so to speak. So there's not much expected. I expect a tight opening swing. I'm expecting an OAIR. I'm looking for it to drift up test the point of control, drift sideways, and pretty much get back up into the point of control and trade sideways for most of the session. I'm expecting about 6 points of range. 6 points of range. That's my estimate, okay, for the day, for the pit session only. And that will be scenario number 1. There's nothing on deck that is likely to drive the market. You have a lot of options, option positions, and so on that are likely needing to be balanced into the expiration quad witching tomorrow. So there's going to be a lot of delta hedging and so on going on today. So don't go crazy. Don't go crazy with what's going on. What's going to likely happen with the market. Otherwise, the better opportunity is for it to push higher, fail to get to the point of control, and then push down. If we push down and we continue the FOMC trend on the close, that would be a much better trade. The key target becomes 26.59 for scenario number 2. However, it is just really unlikely that we will get much range today. I'd love to be surprised. I'd love to see people wake up this morning and see we raised 25 basis points on the Fed rate and get upset about it or something. But those people who care and can move the market already know about it. So it's a pipe dream. But this is a much better trade. Essentially, this would give us failure at the high. We have a lower high on the all-time high by 2 ticks. And the market's failing to find the buyers to continue. And if a market fails to find the buyers, what does it have to do? It has to go find them. And the way to find them is to auction down, is to auction lower to entice buyers to step in. Okay. If we sell off, looking for a bounce back up, and I'm expecting 26.71 on the close, 26.71 on the close to be the area that the market reverts back to. That would be scenario number 2. I really did want to cover the Russell. The Russell's making some interesting moves. I wanted to take a quick big picture perspective on the Russell. This is the Russell day session composite chart. This is showing 1 bar per day. Let's reduce this. Hang on. Let's reduce this a little bit. Okay. And what we have is a market that has run up a fair amount in 2016. Okay, really nice trade in 2016. And then late in November 2016 went vertical. Then this market basically went sideways from November 14th on the gap up all the way to September 26th. It's incredible. 10.5 months of complete sideways trade with a high of 1465 and a low of 1304. So 160 points over 10 months. Pretty serious chop. And then we finally broke higher. And you know, over the last few weeks, I had talked, or a while back, I had talked about the trend down, and that was in this area. I had a channel drawn, and then the market started to push up through it, and it just basically flagged. It pushed up, flagged, resolved higher. And to me, this does look, I'm not an analyst, but this does look like exhaustion to me. It looks like it has already dissipated the energy built over here. A lot of energy. Look at that profile. Very, very compressed profile. And it broke higher and went sideways. And it's pushed new all-time highs, according to this chart, or in this range. But overall, it is stuck. So let's zoom in a little bit. All right. So here we go. It is stuck trading this MC point of control. And so overall, it's been kind of sitting sideways. Here's what the weekly looks like. We've been one-time framing since the middle of November. Higher low, higher low, higher low, higher low, higher low. But it's stalling out this week, and we are trading right against that point of control again. We are trading in the meat of last week's profile, right in the value area, weekly value area. And so we're sideways, and I expect this to continue through tomorrow. I'm expecting this product to basically fade every move. So I'm looking to trade it from the outside in, as it pushes through like it did yesterday. I mean, look at this move yesterday. Look at that move. Just an explosive move higher right here, and it comes right back and just gets back into line and continues to trade right against the point of control. And that happened before the FOMC. Okay, that was not the FOMC move. This was the FOMC move. So it's a fade the trade kind of product right now. I've gone way over my time. I'm going to leave you with that thought, and I want to remind you real briefly, as I promised, win the day. What do you have to do today to win the day? Work on your errors. Be patient. Today is not a good day to push your positions, in my opinion. Hopefully it breaks. Hopefully I'm wrong. We have the opportunity, but overall, chill today. Take a chill pill, man. All right, take it easy. I'll catch you tomorrow.